Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 15th of October 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of, and as it's a Monday we'll consider these from a weekly perspective. And on that basis, it's been a pretty good week for the euro, adding 0.52% against the US dollar. The pound sterling up by 0.17%, trading back above that key 130 level as far as K was concerned. Will it stay there across the course of this very important week is the question. The Aussie dollar, another currency that's been under considerable pressure recently, but it has managed a creditable 0.44% gain against the US rival over the course of the week. The Japanese yen, weaker against the dollar, down by just over 1% over the last 7 days, but not quite escaping that 112 figure. Not the escape velocity perhaps in weakness that the Bank of Japan and Abe, the Japanese Prime Minister, would like. Gains elsewhere for the Brazilian real, up by 1.51% against the dollar over the course of the last week. But it's another emerging market currency that outshines the real, in this case the South African rand, which gained 2.25% back against the US currency. The greenback, the dollar for its part, dollar index 95.32, trading shortly before we recorded the video, down by 0.45% across the week, but above that key 95 level still. Whether it can remain there across the course of this week is probably a question that's foremost in the market's minds. Okay then, what's on the calendar? Events that may move the markets this week and today. Initially we'll look at, and first of all, we have the Italian budget deadline, and we'll look at that in a bit more detail momentarily. Data that we've had out first thing this morning in the form of the industrial production figures for August from Japan. Somewhat confusing and conflicting. The data there, better in places, worse in others, and that'll have economists and commentators scratching their heads, I think, over the course of today. At 7:15 GMT, we shall have producer price and import price data out of Switzerland for the month of September, and then a sizable break until 12:30 GMT, where we'll cross the Atlantic for the New York Empire State Manufacturing Index, and that's for the month of October. That will be accompanied at 12:30 GMT by retail sales, both ex and inclusive of autos, for the month of September out of the US. That's probably the pick of the day's data releases. And at 1400 we shall have business inventories data out of the States for the month of August. At 14:30 the Bank of Canada will publish its Business Outlook Survey. A chance to look at the state of the economy as far as the Bank of Canada is concerned there. And then an hour later at 15:30 we'll have 6-month and 3-month T-bill auctions out of the States. And then another decent break until 21:45 when we swing round the globe to New Zealand for CPI data, Consumer Price Index data, for the third quarter there, both on a Q-on-Q and year-on-year basis. Okay then, breaking news and comment that's caught my eye overnight and over the weekend. And first of all, Brexit talks have stumbled once more over the key Irish border issue after Dominic Raab and Michel Barnier's weekend meetings, and signs of discontent at home in Theresa May's Tory party. Meanwhile, oil prices have jumped again in Asia as Saudi Arabia threatens to use its economic firepower to retaliate if it is sanctioned over the disappearance of a dissident journalist, something that the Saudi government says it had no hand in whatsoever. The evidence and the Turkish government seem to think differently. Okay, Italy's cabinet are due to meet today to vote on the government's budget proposals. Remember that these are figures that have already been rebuffed by the EU authorities, and all three of these headlines suggest to me that political risk and politics per se are going to be a key driver of market action this week. Right, well, time for food for thought and something to take away with you into the trading day and beyond, and why not think about this? And the question I've asked is, did we reach a tipping point in the markets last week? US T-bond yields and US T-bond yields peaked and equities sold off. And what will happen in the next phase? And this chart here plots the US 10-year Treasury bond yield in blue against the US 500 index described in green. As we can see, T-bond yields peaked at the same time really as equities did, and they both sold off together. Obviously a much bigger move down in US equity indices. The yield on the 10-year note now is recovering equities are trying to form a base. So what will happen next? Will we see Treasury bond yields rally back above 3.2%? And if they do that, will that be another sell signal for equities? Or will the market move on to another narrative, and perhaps with the equities staying closer to their current levels than their previously perhaps overinflated ones? That's the kind of topic that we'll be talking about over the course of this week, I'm sure. Right, please take a moment to read this risk warning. Trading CFDs on foreign exchange can be a risky business. If you're uncertain about the risks involved in leveraged products, then please do contact your Pepperstone account representative, and do take a moment please to read this risk warning from top to bottom. Thank you.